Hello everyone and welcome to the second part 2 of Trading Problems series of mini videos I'm doing. Today we're going to look at our second problem, which is, let's put it up there, where are we? Here we are. Let's put that up there. Let's get my big head out of the way and put me aside here. Okay, now our second problem, the one I'm going to address in this video, is risk management. Now once again, I'd just like to remind you, I am looking at all of the problems, solutions from a time and price trading perspective. I'm not trading in any other way. I have time and price pre-calculated and I'm trading accordingly. Alright, so don't get this confused with other kinds of risk management and all that kind of approaches. Obviously there are certain practices and rules that you can keep, but we're just looking at how to solve or how to overcome these problems more effectively if we know the swing days and the swing hours and the pricing before it all happens. All right, so this is what we're doing at Global Trader Club, remember? So risk management, what's the problem here? Lack of proper risk management is a big problem for all traders, and I know when I started trading it was all, it's pretty dramatic as well. It was like I didn't know really how to manage the trade until I got my head around it and standardized it, and in fact I came out with everything that I trade, all the techniques that I use in trading. It was just to get this right. Okay, so it's a problem for many traders, and so we got to be on top of it. So what are the problems here? Not using stop loss orders or risking too much on a single trade, which can lead to large losses. Position sizing, how much capital to risk per trade, okay, and then unpredictable market conditions. Markets behave unpredictably, so they say, and therefore it's causing a lot of dramas for traders. So let's see how we can overcome it at the Global Trader Club. Let's slap here a chart. Alright, so and let me now put my head to the other side. I should have maybe did that earlier on. Okay, so I hope you can see my screen right. Just a reminder, at the Global Trader Club, we calculate the swing days for day trading, right? Day trading swing days in advance. We calculate the swing hours in advance. And we calculate pricing for the month, week, day in advance. For the intraday, obviously we've got to check what's going on. But the daily, we'll have a pricing as soon as the new daily bar opens. The weekly, we'll have it as soon as the new weekly bar opens, and the monthly, we'll have it as soon as the monthly bar opens up. I've got SP 500 in front of me. Now, by now, if you've been watching my videos, you know, let's put this up here so we're all crystal. All right, all of these swing days for the whole of April, everything's already calculated. And I posted these up here, as you can see, on the 22nd of March. So the full month of April, we already know the swing days, we know the swing hours for the week and the whole month, okay? And these videos are daily. I'm posting them up there for the members area. So these are the hours, as you can see, for Friday as well, which is today. And I'm just going to put that down. And you can see these hours are already posted on SP 500. Now, you can see if you're following the markets are crashing, right? So we're all thinking, when are we gonna, what are we gonna do? It's selling like mad. Great. So if everybody's selling like mad, obviously we want to sell as well, but we want to sell on a swing day, or we can even buy on a swing day, just like we did this week. Now remember, the markets are crashing. Everybody's on panic mode because nobody knows the swing days in the market. But on Monday's video, remember I said, listen, Dow Jones and NASDAQ both have a swing day Monday. SP 500's got it on a Tuesday. Can we go up? Yes, we can. When? At the right time, okay, which should be a trading hour for us. So we come back into Monday. Let's just do it. This is your Monday, New York session, trading hours, market going up, Tuesday going up, Wednesday going up, making a high, and then selling off. And remember, Wednesday was a swing day, NASDAQ. And then today we've got a swing day for Dow Jones and NASDAQ. So what does that mean? It means if we are at a certain price, which we are, you can see here on the monthly, right? It's the monthly chart. Market came in, it filled all the PST pricing here and those levels, which I actually just posted on there on the social media as well. It did all those targets. You can see 5,216 there on the monthly. That's your 5,216. Now we are at a trading hour, okay, and that is going to be 10 past 3. We're in that bar. It's a 15-minute chart, so it's 3 o'clock. So we are here. Now this hour plus this 4:35 to 5:25 is good trading times, but today, I did say in the video as well, today is going to be a tricky day because we're supposed to get somewhere and the market can be quite volatile while doing it. So the rest of the trading hours here, which is going to be 7, let's check it out. What would Doug put down there for Friday? Friday 7:50, and then I've got 8:50, 10:50, 11:25. So if we find a direction, we should stabilize around these levels. 8:50 is going to be on that bar. All right. So once we're around here, the market today can make a low and it can bounce off, which is fine. And then what's the beauty is we can already plan ahead for next week. Why? Because we already know the swing days for next week, right? Today is the 4th. Next week starts on the 7th to the 11th of April. Rock and roll. Okay, so we can already see those as well, plus the swing hours as well. So if the market makes a low this week on a Friday, we could look for a position to turn around next week on a dip. If next week we're going up into a swing day, okay, then we'll sell off. Now, how's that going to help us? How's knowing all the swing days and hours really helping us out? Well, think about it for a moment. What's our biggest problem? Unpredictable market conditions. We have just overcome unpredictable market conditions by doing what? By calculating the swing days and the swing hours in advance. Okay, so getting rid of the unpredictability is great. By matching the swing day, the swing hour, to a technical analysis price level that we've calculated is a way of getting rid of unpredictability. I don't care if Trump talks. I don't care about the news. This is news proof, recession proof, Trump proof. It doesn't matter which gingerbread man just came out of the oven. It does not matter. Once we've calculated them, and I've calculated these in 2024, all the swing days are from 2024. The swing hours I'm doing monthly, and then I'm adding them on. Now, the rest, though, is going to be obviously mechanical. Now, why timing is important? Because if I know the swing hours of the day and they're matching a price, I don't have to put I don't have to put a stop loss too far out. Let's say somebody wanted to get into the market around here. Okay, fine, you can. Your stop loss should be just under there. Why? Because this is the trading hour. This is the trading hour. So you're either going to enter around here, or you're going to say, you know what, I'm going to wait for this 435, 525 zone, and I'm going to do it there. Okay, but this 750, 715 onwards, 715 to 750, in fact, this zone here, once this is over, this is going to be a volatile zone. All right, so understanding that we're going to head into volatility where the market can be really volatile, knowing that in advance is already great for risk management, because you want to understand that you don't want to take any chances during those hours. So normally Fridays don't trade. I don't trade Fridays. I normally work. I'm only working today. Why? Because we had a hailstorm. My jobs are going to go to the farmer's market in a minute after this video. Now, once I know the time and the price, the stop loss is tight, and you can enter the trade there and then. All right. Many traders, we have to in trading, because our amounts are not like the banks, and we're not trading like the banks. Okay. If your account is not big, you're going to have to use some kind of a confirmation. Banks and all that kind of hedge funds, they don't. It comes to a price that they've said, you know what, I'm going to buy it at this price. They just go in, all right? But their accounts are huge. if you're day trading and your account isn't huge, you don't want to be risking too much. So the way to do it is use time and price together. If your time and price match, you can enter it if it's a swing day. If it isn't, then you're following the swing day, the previous swing day, to the next one. Or if the market turned around, like in the euro dollar example this week, you can follow it all the way into Friday, okay? So that allows you, let's check that out as well. And that allows you to do better risk management. For example, we had, I think it was Monday, right? Euro dollar swing day was Monday. Yeah, we got Monday and Friday for the euro dollar. This was a target I put up ages ago. Okay, so we're expecting the market to come up here. Now look, Monday, market sells off all the way into Wednesday. I didn't have a swing day for Wednesday, but on Wednesday, the market did go up. If you take a look at the swing hours, if you are trading, this is, let's go into Monday, all right? Let's go into Monday. Oh, come on. This is your Monday. All right, so on the euro dollar. As you can see, the market makes just a little bit of a retracement, nothing big. It's all pretty much sideways, sloppy downwards until Wednesday. Okay. Nothing great, but what should have been our position on that day? On this day, if the market was up, we should be selling. Why? Because we went up into the swing day. So we should be selling, not buying. And then until the market came down, is all good. Now on Wednesday, we had a breakout. So on Wednesday, if somebody did take a trade, and let's say they sold on a Wednesday, let's say we were completely wrong, okay? Where would they have sold at the trading hours? Okay, so you could have sold in a few places. You could have sold when the market was high, because you don't want to be selling cheap and you don't want to be selling in the middle of nowhere. So here's your zone. That's the Monday high. Okay, so where you would be selling would be at the highs of Monday or the highs of Tuesday, which is there. So the only time you would really be selling is here if it matched your hours. If it didn't match your hours, you don't sell. Okay, you don't trade if it doesn't match your hours. So if you wanted to follow that down on a Wednesday, you would have sold here. Okay, if you sold here, you would have been stopped out because your stop loss would have been just above the high here. Why? Because if we are wrong, we don't want to stay in that trade. This is why you can minimize your risk with time and price. Okay? Even if you get it wrong, your stop losses are very tight, because if your timing and pricing is wrong, you don't want to be there. There's no need to wish that things will turn around, because we calculated time. Okay? So time and price together. And that's it. And on Wednesday, what happens on a Wednesday? Look, on Wednesday, we needed to be a bit sharp, because this is Wednesday. And if you take a look at your PST, Wednesday, pretty much, well, it wasn't like this on Wednesday, but what happened was market broke out, didn't it? Once it breaks out, obviously, you got to go for the targeting to the other side. And then Friday is a swing day, which is today. What does that tell you? Well, if we broke out on a Wednesday, we should be going up into Friday. So I already know the bias. I already know targets, because I've got my red lines here. Plus, on the weekly, I got the blue line up there. So I know where we're going. Not to mention, we had this level in before. So we have pretty much price pre-calculated. We understand if we have a swing day on a Friday, we're going to go into Friday, so we're going to go to the upside. Then all of a sudden, your trading is a bingo trade, because on Thursday, you're a buyer going into Friday, which is a swing day. Does that make sense? I hope it makes sense. So now that your bias is to the upside, all you got to do is buy in. In fact, on Thursday, thought I had an Asian hour on Thursday, 5 a.m. my time. Remember, my time zone is UTC plus 3. 5 o'clock is there. That's it. So from here, the market has bounced off from the PST level on the weekly. Look at the PST level. Sorry, on the daily, which is right on the line. Now, because this is the daily, the PST price will change on the day. But on this day, that red line and the blue line is your buy me, please price. And that, you can watch the videos as well, would have been these two lines here. In fact, I think we had 0814, didn't we? Something like that. But you can watch the videos and see what that price was. Okay, because I post the daily videos that are in the club afterwards on YouTube, so you can check it all out. You can actually measure the time and everything. So once we have a bias, once we have a breakout to the other side, knowing the swing day in advance, I understand where I'm going now. Okay, great. Do I have a price target? Yeah, we also had these red dotted lines. Okay, not to mention this from ages ago. So there you go. Okay, so that will obviously help you to manage your risk, because even though you made a mistake after the breakout, you understand how far you're going to go. Okay, so that's already great. Now the position sizing is obviously your call, but if you enter with price and time, like I always say, the stop loss must be very, very tight. Even with gold, look, yesterday I did a video as well. Maybe you watched that, right? In yesterday's video, actually I was doing trader problems video 1, right? And we were right in the middle of gold, right? And I said, there are two options here. We're either going to come into the trading hours and go up, or we're going to go up and then come down. Why? Because we had a PST level here. Watch part 1, you'll see what I'm talking about. Okay, and the reason I'm doing these videos like one after the other is so that you can follow the movement of the market, and as you follow the movement, you can see the time and price. Oh, this is great because I can trade it off. Now, if this is the time the market is supposed to turn around, okay, at a weekly pivot level, because you guys know about that by now, right? And we did have another level here, I think. Was it on the daily or the weekly? I'm not sure. Maybe we had the LCL one line here, 3064, I think that was. So 3064. Let me bring that here, 3064. Okay, because that was a LCL one line. And the market comes here exactly to the PST level at the trading hour. So what does gold do? It's just going up. Boom. Okay, and that's how it is. What should you be doing here? Nothing. Why? Because this zone where the timing is, it's in the middle. All right. Why I'm always telling you guys to trade on the edges when time and price match, because those are your less risky moments. If you're going to trade in the middle, then you got to have your bias, a direction, and you have to have a technical setup, which you can do on a smaller time frame. Like, I don't know, if you want to do a retracement or a breakout. For example, this is London. Okay, London morning session here is in this box. This is a trading hour right underneath the opening price. That is a technical level. But if you don't have a technical level, then don't muck around with it. The market is already done from one edge to the other edge. Okay, also with our technical analysis, okay, we don't know where we're going to be. We could be coming up, we could be going up or down. But remember, Thursday was a swing day. So knowing Thursday was a swing day, I'm like, okay, you know, we can sell it off at the highs. If you want to buy at the target, which I did say you could also do, if you want to buy, you got to buy low at a PST level, then that's also okay. Even if you did that, you would have been just fine, both selling it and buying it. And that's your 5 a.m. on the Asia session. And we had 3,150. I put 3,150 the day before as as a you know, like a guideline around there, and we had 3,174 yesterday on the daily PST. What I'm trying to say is this: if you can match your swing day, your swing hour, and a price, you're going to have a bingo trade. Your stop loss is going to be tight, and even if you make a mistake, even if it's wrong, your stop loss is so tight it's going to be irrelevant, and that's money management, and you can do that all the time. Okay, I've demonstrated on numerous occasions as well in trading in the club area as well. I've posted a bunch of stuff. I remember when we started doing those tradings, and I was just posting every day, guys, this is a level, that's a level, this is the time, and so on. So hopefully we'll get back onto that kind of a routine once I start putting together the software development stuff. Okay, so this is how it can really help you have technical analysis with timing, swing days, and pricing. It will reduce your risk, reducing also your stress and cortisol levels. All right, have a great weekend.